Benjamin Graham's The Intelligent Investor is often called the Bible of investing, and for good reason. It is not a book about getting rich quickly or predicting the next hot stock. Instead, it is a guide to building wealth safely, wisely, and with discipline. Graham's central message is that successful investing is less about brilliance and more about character, patience, rationality, and the ability to resist the emotional swings of the market. One of Graham's most famous ideas is the character he calls Mr. Market. Imagine the stock market as a business partner who shows up at your door every day, offering to buy or sell shares. Some days, Mr. Market is cheerful and optimistic, offering very high prices. Other days, he is gloomy and fearful, offering very low prices. The intelligent investor does not get carried away by Mr. Market's moods. Instead, he uses them to his advantage, buying when prices are low and selling when they are high. This simple metaphor teaches us that the market is not a master to obey, but a servant to use. Another cornerstone of Graham's philosophy is the margin of safety. This means you should only buy investments when they are priced well below their true worth. By doing so, you create a cushion against mistakes, bad luck, or unexpected downturns. For example, if a company is truly worth $100 per share but is trading at $70, that $30 difference is your margin of safety. Even if the company faces challenges, you are less likely to suffer heavy losses. Graham insists that this principle is the single most important rule of investing. Graham also divides investors into two broad categories: the defensive investor and the enterprising investor. The defensive investor values safety above all else. He prefers simple, steady investments such as bonds, index funds, or shares of large, stable companies. His goal is not to beat the market, but to protect his capital and earn a reasonable return. On the other hand, the enterprising investor is willing to put in more effort. He studies financial statements, hunts for undervalued stocks, and looks for special opportunities that others overlook. Both approaches can succeed, but Graham warns that whichever path you choose, discipline and patience are essential. A recurring theme in the book is the danger of emotions. Fear and greed are the two biggest enemies of investors. Fear makes people sell in panic when prices fall, locking in losses. Greed makes them chase hot stocks or speculative bubbles, often buying at the worst possible time. Graham argues that intelligence in investing is not about IQ or complex formulas, but about emotional control. The intelligent investor stays calm, patient, and rational, focusing on long-term results rather than short-term excitement. Graham also emphasizes the importance of balancing between stocks and bonds. He suggests that investors keep a mix, often around 50-50, but adjust depending on market conditions. If stocks are overpriced, lean more toward bonds. If stocks are undervalued, lean more toward equities. This balance helps protect against risk while still allowing for growth. It is a reminder that investing is not about putting all your eggs in one basket, but about managing risk wisely. Another lesson is that markets move in cycles. There will always be booms and busts, periods of optimism and pessimism. Inflation, too, is a constant force that reduces the value of money over time. No one can predict these cycles perfectly, and Graham warns against trying. Instead, the intelligent investor prepares for them by focusing on fundamentals and maintaining discipline. By refusing to speculate and by sticking to sound principles, investors can survive downturns and thrive in the long run. In the end, Graham's teachings are timeless. He tells us to treat the market as our servant, not our master. He insists that we always demand a margin of safety. He reminds us never to let emotions control our decisions. These lessons have guided generations of investors, including Warren Buffett, who called The Intelligent Investor the best book on investing ever written. The book's wisdom lies not in complex strategies, but in simple truths. Protect yourself from mistakes, invest with patience, and focus on long-term value. If you spend 10 minutes with Graham's ideas, you walk away with a philosophy that can last a lifetime. Investing is not about predicting the future or outsmarting everyone else. It is about discipline, safety, and rationality. That is why The Intelligent Investor remains a classic. It teaches us how to be not just investors, but intelligent investors.